Hey everyone, it's Ryan, and this week we're going to talk about profit sharing. Before we get too deep, let me go ahead and say I'm not an accountant, and if you're thinking about implementing a profit sharing program, you should definitely talk to your accountant first. With that being said though, you may find yourself, like I did a few years ago, wanting to reward my staff, wanting to let my employees know, hey, I want you to participate in the success of the business, but I didn't really know where to start. I'd heard horror stories about profit sharing programs going wrong, and I didn't want to get it wrong. It's actually not a bad idea because rolling one out improperly, having an improper profit sharing program can actually do more harm than good. So you want to get this right. So today, I want to share some of the tips and tricks that I've learned to maybe make it easier if you're thinking about implementing one on your own. So to begin with, why? Why did we want to do something like this? Well, a profit sharing program is just simply a way to reward staff when the business does well. The business succeeds, staff succeed. It's also a way to instill, what I was looking for at least, to instill a little bit of my ownership mentality into the minds of my staff members. I wanted them thinking as much as possible like me and giving them a percentage of the ownership as far as the profit goes, I thought would do that. Now that being said, there's a couple of different types of profit sharing programs. Some of the more complicated ones even include stock ownership, where you're giving stock to employees. I did not go that route. This profit sharing program is simply cash. When the business makes money, the employees get a percentage of that, but there's no stock ownership in this plan, just FYI. So I was talking to a mentor of mine and I was saying, hey, listen, I want to do it, but I'm scared. And he said, well, why would you not? He said, why would you not implement a profit sharing program? He said, either the business isn't doing very well and you don't want people to see how poorly you're doing, or you're doing really well and you don't want them to see how much you're making. He said, I bet if you ask your employees, they already think you're making a lot more than you really are now. So I kind of took that as a challenge, and I came back to the office, and at one of our next staff meetings, I asked everybody, take out a piece of paper, write down how much revenue you think the business generated last year, and how much of that you think the owners took home. You know, the average employee thought that the owners were making $800,000 a piece per year. So chances are, like if you did the same, asked the same in your organization, they may not be accurate. So at the end of the day, if you're afraid that people are going to see how much you're making, they're probably already estimating way above that. And I'm not necessarily suggesting that you mention payroll on your profit sharing program. In fact, my rule is I'll talk to any employee about any number, anytime except payroll. I won't talk about payroll with employees. Now I'll talk to them about their specific payroll, but not anybody else's payroll. So let's go ahead and get started. Some of the tips and tricks that I've learned. Number one, get the right people. You need the right people in the right seats in your organization, not just for a profit sharing program, but for any program to work well. If you don't have the right people in your organization, come and see me. That's why EOS is so important to me. If you're not an EOS subscriber, if you don't use EOS to run your business and you're having some people issues, give me a call. That's why I'm here. Number two, be profitable. This is a quarterly profit sharing program that we do. You can do it monthly, you can do it annually. I think quarterly is a good time frame. But if you're doing a quarterly program, the worst thing you could do is have 2 or 3 quarters of unprofitable quarters if you're just starting it. So say you're starting a new program, you don't want 2 or 3 unprofitable quarters. It's going to discourage everybody, and at the end of the day, they're just going to forget about it. It's going to be time and effort wasted on your part to implement a program that's not benefiting you in any way. The next one, you've got to teach the financials. Don't assume your employees know anything about finance. Start at the bottom, start with the basics and teach them. This should be probably a couple of sessions and record them. So what we did, we had some Finance 101 classes and went through the very basics. And really, if you record those, then for future employees, you can just simply have them watch the videos instead of you having to teach Finance 101 to every new employee. With that being said, this is how I did it, and it worked pretty well. Get on Amazon and buy some play money. This is fake money. You can buy as much as you need. You can buy a few $1 million worth of fake money relatively inexpensively, just for a few bucks. So what I did, I stacked all my play money up and I bundled it in expense categories. Like this is maybe payroll taxes. This is occupancy expenses. So I stacked it up. I had a huge stack of money here, and I said, okay, everybody, that's the amount of money the business generated last year. And then one at a time, I had employees come up, take off a stack and read it, and then lay it to the side and say, okay, this was a payroll tax. Oh, this is occupancy expense. And at the end of the day, they were shocked to see, wow, we started with this big stack of money, but that's not all discretionary. At the end of the day, we're left with a pretty small amount, relatively speaking, of profit. And so it kind of helps, you're kind of helping put the money, the income of the organization into perspective. So again, we're teaching everybody how the business generates revenue, how it spends money, and you're wanting them to understand that, and most importantly, to understand where they fit in the picture, how their daily activities contribute to the success of the business. So again, I'm not an accountant, but we had some high-level conversations about the reports you need to really run a business. And as a business owner, you should be looking at these reports pretty often. Things like balance sheet, things like statement of cash flow, and then P&L. And for the purposes of our bonus plan, we spend a lot of time on the P&L. And of course, we spent time discussing each of these in detail initially, but now every month when we review the previous month and talk about plans for the next month, we really focus heavily on the P&L. We basically created a condensed version of our P&L that I hand out in the meetings every month, and we review how we did. Again, we'll discuss any number at any time with any employee except payroll. So to put it in perspective, we've explained to people the accounting formula here, revenue minus expenses equals profit, and explain to them that this is very true, but from a P&L standpoint, the number that this doesn't take into account is asset payments, things like furniture, fixtures, vehicles, things like that. They generally don't show up on a P&L. So what we've done at our office is added that so we can make sure that that's factored into the formula properly. So we've said then, so revenue minus expenses equals our profit, and then we've said this is our net profit minus our assets, these are asset payments for the month, equals what we're calling, for the purposes of this this profit sharing program, calling this our operating profit. So let's put some numbers in here just so it starts to make sense. Let's say that your revenue for the month, let's just say $500,000. And let's say your expenses were, let's just say $390,000, which leaves you with $110,000 in net profit. And let's say your asset payments, which again, typically you can find that kind of stuff on the balance sheet. You pull that off, say it's $10,000. So that leaves us an operating profit of $100,000. So what we've done with our asset payments, we have estimated our monthly asset payments, and that number typically doesn't change. Over quarters it may go up or down, but month to month we typically don't change it. We estimate it, and so that way folks know about what to expect every month. So with this being said, we have an operating profit of $100,000. So what we've done at our office, we've said 25% of that is going into the bonus pool. So you can say, okay, take 25% of that, which would be $25,000, and that is our bonus pool for the month. So we pay this out quarterly, so we would add this month to the next 2 months, and that would be your total bonus pool for the month. For the quarter. So the next question, very important, how do you pay that out? Well, what we've done, we've told our people that about 6 weeks after a quarter closes, we will pay out the bonus. We'll take the whole pool, the whole bonus pool will be paid out. And the first few quarters we did it very simply. We simply divided it by the number of people. We said, okay, if you've got 20 people and you've got $20,000 in the bonus pool, each person gets $1,000. If you've got 20 people and you've got $60,000 in the bonus pool, each person gets $3,000. That was a very simple way, and actually a pretty good way to implement it. After a few quarters, you can kind of mature into a model which will actually help drive change, positive change, is the one number, my big one number. So again, we're trying to motivate people to change, to move in the right direction. Find people's weaknesses that also are needed for the business. If you've got employees that don't put their timesheets in on time, or you've got employees that aren't utilized, or maybe they're not making as many widgets as they need, give them that goal. So say their one number, say Bob is making widgets and he should be making 10 a day and he's making 5. So Bob's number is 10. And say, okay, Bob, for you to participate, you need to make 10 widgets a day. So at the end of the quarter, you can look and say, did he make 10 a day? But if you're doing it well, you're actually asking Bob every week, or Bob is checking himself and saying, am I making 10? Am I making 10? If he's not, he's coming to you and asking, how can you help me? How can I make 10? So he's kind of self-policing. So assuming he is making his 10, he participates in the bonus pool. If he's not, if he does not make his goal, he doesn't participate. So if you had 20 people that were going to split $20,000 and Bob doesn't make his number, now you have 19 people that are still going to split $20,000. So the bonus for the rest of the team actually goes up a little bit because Bob did not make his number. I've seen other companies, because they didn't want to foster anti-teamwork, they didn't want people's bonuses to go up if individuals' bonuses went down. They've done departmental bonuses or whole company bonuses where either everybody got it or everybody didn't. At least across the department, that can work. And there's many different ways to split this up. You can split it up based on position. Again, many different ways. This is just a sample of one of the ways that you can do it, and the way that's worked really well for us. Again, back to our tips over here. Setting goals, that comes into our one number. Getting people to understand and improve on their one number is a big benefit to this. This is not a referral program. So we have recommended, and we do recommend referral programs. So referral program would be basically a way to reward an employee if they help bring in, say their job is not sales, so technically everybody's job is sales. If you've got an employee that's not directly a salesperson and they help bring in a new client, you can reward them with a referral program. I recommend a referral program for your staff and also for your existing clients. If an existing client brings in another client or refers them, heck, I want to make sure they understand how appreciative I am and reward them. So while we recommend a referral program, this is separate from that. And then again, ownership mentality. At the end of the day, that was one of our big goals, to instill some ownership mentality into staff members, and I'm happy to say that that has succeeded. You will find a few people that just simply aren't that motivated. Shocking, I know, as it may be, everybody's not motivated by money. And if that's the case, then this is not necessarily going to motivate them, but it's not going to hurt. Having people understand how business operates is never a bad thing. What we found is while it doesn't motivate everybody, it does motivate most people. And even those that aren't highly motivated by it, at least they're understanding and they're seeing how they fit in the big picture. So if you have questions on this, let me know. And good luck with your future profit sharing program. Thank you.